Hey everyone, it's Coram and Ken Shreve here with your option of the day. Now, earnings season is really in full swing. We've got a lot of the big tech companies reporting, and Apple is due to issue its report next week. Mega cap tech stocks have been on the move lately. So, how's it looking for Apple right now?
Well, I think it's Apple has made a nice move off lows, right with the market. The Nasdaq is still kind of struggling to regain its 200-day moving average, and Apple is still below its 200-day line, but it has rallied nicely above the 50-day moving average amid maybe some optimism that their quarterly results next week might be pretty good.
All right, well, let's take a closer look at the chart. As you mentioned, Ken, the stock moving strongly off of its lows, getting above one key moving average, getting close to another one, that 200-day line, as you mentioned, above that round number at 140 earnings. A calendar 7 days away at this point, so due next Thursday. How might investors be looking at the options market to play this stock? I know you have a great earnings preview column every week where you are looking at trade ideas.
Yeah, so technically Apple looks okay here. It has come off lows. I haven't seen a whole lot of volume behind the recent rally, and that has sort of weighed on the stock's accumulation distribution rating of C. That said, the sentiment has improved quite a bit in the stock market. I think what Apple has going for it is that when you're in a confirmed uptrend and you're seeing signs of accumulation in the indexes, it can make for a pretty good environment for companies to be reporting earnings. And sometimes we've seen companies recently with earnings miss or a revenue miss, and the market is kind of shrugging off bad news and maybe looking at a positive outlook. So it seems to me, just with market sentiment improving here, the fact that we're in a confirmed uptrend, I think that Apple could make sense as a call option trade here.
Okay, great. So Apple trading just shy of 143. Let's take a look at some options data now from CBOE. So as you mentioned, going with a long call, we would be IBD's earnings option strategy would be looking at calls that are slightly out of the money. So basically, Ken, what this does is it allows us to define our risk, right?
Exactly. So what we can do is just kind of scroll down here, and you see Apple reports earnings on February 2nd next week. So we're not gonna look at that February 3rd expiration. In fact, we're going to go a couple weeks out and maybe go all the way down to the Friday, February 24th expiration. And you said with Apple right now trading just below 143, we can look at a slightly out of the money call option, and we go down to the 143 strike price here and see a very tight spread between the bid and the ask, $5 and 505. So if you take $5.05, which would be what the amount of the premium that you'd be paying, and divide by the stock price at the time. So with Apple, let's call it 142.80. That is about a 3.5% risk trade, which is pretty palatable
Yeah.
because you've got time for this to work. I mean, pretty much almost the whole month of October. This option doesn't expire until February 24th. So in terms of downside risk, it's a 3.5% risk trade, and it seems you know. Seems to make some sense here.
Yeah. And so the benefits of going with something like this versus outright buying the stock just ahead of the report is that, as you're saying, your worst case scenario, the maximum that you could lose is that three some odd percent versus if, worst case scenario, we did see a big gap down for the stock, you would not be participating on the downside beyond that three percent or so that you paid for the premium. So, and then on the upside, I guess you would just build in what you paid in premium into where your break even would be on the trade.
Exactly. I mean, you would just basically add the premium. So right now we're looking at a premium of $5.05. So you'd have to add that to the strike price, 143. So in fact, Apple would have to rally past just a little over 148 for the option to start making money. But your risk, like you said, is predefined here, because if you're just buying one contract for the, just keep it simple,
Yeah.
for the right to buy 100 shares of Apple at 143, the trade is only going to cost you a little over $500, and your loss is preset. I mean, the worst that can happen is that you're going to lose the amount that you paid for the premium. So your
Mhm.
loss is predefined at $505. That's the worst thing that can happen if Apple falls on earnings. But if it does rally, it is going to have to rally past 148 for this trade
Mhm.
to start making money.
Yeah, and the goal here is to not just trade the option, but to actually take ownership of those shares for this strategy. And with that 148 level, that's right where the 200-day line is. If we could take a look at that chart again, just real quickly as we wrap. So that would bring it up to a very key technical level, Ken. And if we can continue to see the market move higher, we've got the Fed next week as well. So this week, a big week for earnings. That'll continue next week. But we are looking at all different scenarios, including those positive bullish scenarios that we could see for stocks.
Exactly. So if I wanted to pull up this, I'm just going to hit this. I'm going to pull up the Apple chart here. Does that look good?
We are still
Oh,
seeing the option chain,
oh, okay.
but we'll take a look at the Market Smith chart here. And yeah, so we have a 200-day line right here. What else are you looking at here, Ken?
Well, that is a good point. I mean, the index itself is kind of struggling to regain the 200-day moving average. So, but again, with Apple, when they reported earnings in late October, in fact, we can just take a look and see the stock was up 7.5%. Expectations were not very high when they reported 3 months ago. Their iPhone revenue was up 10%. Pretty impressive growth, but it was below expectations, and they did see some pretty decent revenue in their other products category, which includes AirPods and the Apple Watch too. So expectations aren't real high this time around either. According to the Zacks consensus estimate, earnings are expected to be down 8% to $1.94 a share, and revenue down 2% to 121.2 billion. So I think, like I said, the expectations aren't real high for Apple. We've obviously been well aware of the production difficulties in China at the Foxconn factory. But I think there's a chance that we could see maybe Apple talking about brighter times ahead. So yeah, call option might be a good trade here.
All right. Well, we'll have to see what next week brings. Thank you so much, Ken, for breaking down this trade idea and look at how Apple is expected to fare in this next earnings report. And we know you'll, along with the team, will stay on top of that next week. Thanks again for watching, everyone. That's your option of the day. So make sure to check back in with us every day for new option trade ideas. We'll see you next time.